Hello traders, this is Corey Mitchell with your swing trading stock market outlook for the week of October 30th. We'll keep this one pretty brief because there's not a lot to talk about. I go through the same process each week, basically looking at overall market conditions. That determines how aggressive I'm going to be deploying capital. Heading into the week of October 30th, conditions are poor, so I'm going to currently be holding off on deploying capital on long trades. This has been going on since August. I haven't said this in all the videos, but when conditions are poor, you do have the option to go short based on my conversations with lots of people who come to the site. I'd say probably about 80% of people visiting the site are long-only investors or traders, swing traders, but you do have the option to go short. So I don't usually put that in there, but there is always that option. And the best swing trading stocks list for October, that contains a list of very strong stocks and very weak stocks. Those weak stocks are ones to consider for going short if you're one of those people who has going short in their trading plan and strategies for doing so. Let's look at how the markets are doing. I like to look at a few different indices just to give me an overall view. From a price action perspective, all of them in this current downtrend, lower lows, lower highs. We look at the NASDAQ trending lower, the highs. Each of these highs are lower than the prior one, and we just made a lower low below these lows. S&P also very clear, lower highs, lower low here, and then a new lower low. The NYSE composite, same thing, just dropping all the way back almost to March levels. The Russell 2000 at its lowest levels for the year, having taken out these prior lows, and we're in this shorter term downtrend. The Canadian index also very weak, had been kind of ranging, and that has broken to the downside. The one bright spot is Bitcoin had this really big rally. We had been talking about this range and that it started to push off and just bolted out of this sideways range, which had been in play for months. I've also overlaid Ethereum on here, just it's another major one. And it's been popping too, but you can see based on the performance over the last, since 2000, for the year of 2023, Bitcoin up about double what Ethereum is, so much stronger than Ethereum. So overall, weak conditions, don't want to be buying into this. We could start popping at any point, but once that occurs, then we'll have time to start buying. I'm not going to try to pick a bottom here because we don't know how it could drop another percent. It could drop 10%. I just don't know. So I'd prefer to just wait till we start getting some price action signals that say, hey, we're starting to move into an uptrend. We start seeing higher swing highs, higher swing lows. And these health indicators will also turn around. They usually get us in pretty quickly once the market starts to look a little bit healthier. So let's look at this chart. So this is an S&P 500 chart, and then I've added some indicators which show the underlying strength of the market. So they're not actually derived from the S&P 500 per se, but it just gives us a view of the market up here. So this is how many stocks are above their 50-day moving average. MMFI is all U.S. stocks, and the S5FI is S&P 500 stocks above their 50-day moving average. Just a crude measure of how many stocks are in short-term uptrends or downtrends. When we're above 50%, that means more than 50% of stocks are above their 50-day moving average, and you can see we are well below that and have been since August. And I'd say this is probably one of the simplest indicators to follow for assessing market health. It's going to be easier to make money when most stocks are going up like they were here during this period, June, July. And talking with lots of people, they're saying, I was doing really well earlier during the summer, and now all of a sudden I'm not doing so well. This is part of it. It was most stocks were moving up during this time, whereas right now most stocks are moving down. If you're buying, it's going to be a lot tougher to make money. The volume, not important at the moment, at least how I view it. And this is rate of change. This is the daily percentage movement of the S&P 500. And if we go back here to the downtrend, this was the last part of the downtrend of 2022. You see these big drops of 2% or more. So I've highlighted this red line is a 2% down day. And there were just loads of them, just pretty constant. These big drops, big drops. And then through 2023, we've really stabilized, and that's more indicative of uptrending behavior. Even though we've been dropping, this has not been a massive sell-off type situation. The selling's been pretty contained. We've had a couple like minus 1.8% days, 1.9% days, but none of those really huge sell-off days. And so, that tells me maybe this is just more of a minor correction. But again, because these other ones are so negative, even though this one's kind of holding up okay, it's not enough reason for me to jump in and buy. This is the NYSE advanced decline line. It's up days versus down days, or advancing stocks minus declining stocks is a cumulative number. And you can see it's a little squished here, but it's in a nice steady downtrend, basically confirming what we have in the S&P 500. Sometimes this will not confirm. We might have the S&P 500 dropping, for example, but this is starting to trend up, the NYSE advanced decline line. That's a good sign. Right now, they're just moving together. They're both dropping, so that's not good, just basically confirming what we can see on the price chart. This is up volume divided by total volume. No signals recently for that one. So we have obviously price action in a short-term downtrend. Lots of stocks, most of them, only 15% of all U.S. stocks are in an uptrend, or thinking of it the other way. About 85% of all U.S. stocks are below their 50-day moving average in a short-term downtrend. So very low probabilities on the long side at the moment. We want to see this start pushing up. Once this pushes up above 50, that's when I start liking the price action better, or getting involved. We're likely going to have seen a nice push to the upside once that occurs. So those are the things to start watching for. You can also start watching for this to start making higher swing highs and higher swing lows, the NYSE advanced decline line. And of course this, we want to keep seeing days not dropping more than 2%, kind of like what we're seeing. Just, a little bit of upside, a little bit of downside. That's more uptrending type behavior. We do not want to start seeing things like this where you have really big movement. That's more indicative of downtrending behavior. So those are some things to watch for that shift of when we're going to start to buy again. I haven't had any trades on the long side, so there's not much information on those. I assume they're not working out very well if you're taking them. Sectors on the move, nothing. I don't like any of the sectors right now. Nothing's working. Everything's negative. Yeah, you could argue some of these on the top of the list are holding up a little bit better than the ones way down here. But the point is, you don't want to be buying crap just because something else is crappier. We want to be trading when it's the easiest money possible. And that's when you have certain sectors, lots of stocks, like pretty much everything's just moving up. Right now, almost everything's moving down. Not a good time to be buying. Maybe a better time to be shorting the last, month or so. Quite a bit, probably some good profits there for those of you who are shorting. So what I'm doing right now, I'm just sitting in cash, at least on the long side, waiting for conditions to improve before buying into any swing trades. And of course, always day trading stocks, currencies, and passively investing. The one nice thing about when a market declines, you do get some of these stocks on sale, which are quality investments, or just some of the ETFs that are tracking indexes like the S&P 500 and NASDAQ. You can pick up those on the cheap. So yeah, you can check out those. Also, if you are interested in any of the courses, the day trading courses, the swing trading courses, there is a sale on starting way early for Black Friday, and it's Black Friday 23. And if you come to the website tradethatswing.com, you'll see a little pop-up, and you can punch that in, and it's 20% off all courses. And so take advantage of that for Black Friday through the month of November. That's your swing trading stock market outlook for this week. Have a great week out there.